All righty. Well, welcome back here to Trader Minute. Great to have you aboard. We're about 5 minutes away from the release of the Fed statement. Um, Anytime there's an event like this, I simply kind of go after it with the mentality of anything can happen. And when I look at my trades across the board, I make sure I understand what my risks are. I understand what worst case scenario is, and that I'm okay with that if that occurs. Okay. I never want to go into one of these situations with a huge bias. Obviously, I have some biases. Expecting interest rates to fall and expecting a little more flight to some of the safety trades. I never want to, be overly levered. I always like to have money to be able to put to work after an event like this. And while I don't have that for I don't really have money to put to work for the 100K challenge. I have some for the candlestick challenge to put to work as potential here, and also for Vibe and Trend Rider. Vibe and Trend Rider signals. It was funny talking to Carl just about 10 minutes ago. He's like, it's a ghost town out there. And that's typical ahead of the Fed for there to be a ghost town of signals. But generally what we get are quite a few signals come in after the Fed reaction. On any Fed reaction, on any real market event where we're expecting, some major movement, okay? I'm looking for a few things. Okay, the biggest thing that I'm looking for are the reaction highs and the reaction lows. There are a lot of automated systems out there, algorithms and auto traders and other systems like that will get inputted the Fed minutes and within milliseconds spit out buys and sells. And so it'll create some of this, generally a large range, depending on how highly anticipated the event is. This event hasn't been very highly anticipated. It's kind of a downer as far as Fed events go, kind of leading into it. There's not a whole lot of expectations. And they tend to be the most dangerous ones, meaning they can have some of the biggest reactions. But either way, we'll kind of see how this kind of plays and goes, and what they say. I think there is potential that they could say some things that could cause significant movements significant movements going forward. But I don't really have a high expectation that we will see, that type of thing happen. Tradehound, you asked me a good question. You said, do you think that we'll see the pre-announcement action we've seen in the past? Yeah, I mean, in the past, the last, 5-6 Fed meetings, we've seen the market go up and go up sharply into the Fed. Today, we are seeing the complete opposite. I mean, I have the 1-minute chart up here of the market, and market opened up right here around 1768. It's now trading down around 1760. It's only 8 points. It's not, a huge move, but it has been sold. The markets have been sold here instead of being bought up ahead of the Fed here. Okay. So that's a little bit different. If we kind of zoom out on our chart, okay, and I'm here on a 15-minute chart, there's nothing here that I say, there is this key point that if we break this level, hey, the market's going to go down. And if we break this level, the market has to go up. There's not a real key technical level that's out there on the board right now. Couple things that I want to be paying attention to. I want to be paying attention to what goes on with bonds. I want to be paying attention to what goes on with large caps and small caps. I want to be paying attention to what goes on with the U.S. dollar. And I want to see what happens to the high flyers. Does money continue to come out of them? Does something like Las Vegas Sands get sold today? Does something like Baidu actually turn negative? We start to see that type of action. That could get pretty ugly. Okay, Tradehound, as far as you're talking about news leaking before the public gets it, Well, the Fed addressed that topic. Was it last week? I believe I read a couple things on that. They say they were beefing up their security, whatever that means. As far as getting it early, for traders like you and I, there's no advantage to getting it early. We're basically looking at the reaction, right, and basing on the reaction. It's something where we understand that the rules of the game are fixed and that people will get early and some people will get it late here. Okay, initial reaction higher here on the market. We're seeing the market pop 5 points initially here. Gold pulling back a little bit, silver pulling back a little bit, bonds relatively flat overall here. Very muted initial minute. Yeah, John, they get a 0.007 milliseconds before it's officially released, and that's to account for for some of the delay in transmission, right? Um, okay, Fed says it'll await more evidence before QE taper. Keeps monthly buying at 85 billion, so kind of exactly what we were looking for. They're not really going to do much. They're just going to maintain it. Only one dissenter. They talked about slowing housing, which we've talked about with the data. Fed fiscal policy says fiscal policy restraining U.S. growth. So Fed blaming Congress. Fed says that economy expanding at a moderate pace. Employment elevated. Labor market showing improvement. So they haven't said anything different. There's nothing really different in the initials that I look at here. You see the reaction. Initial reaction was a pop higher. We're now getting a drop lower here. Okay. We're seeing some weakness come in on the bonds. We're seeing a little bit of weakness here in silver coming off its highs, gold coming off of its highs. ABX holding up all right. Other things not really too much changed here. The XLE going back towards its lows for the day. Here's the TLT down about 50 cents. So far, not really a reaction out of the TLT. There's not a major reaction happening here. Okay. Okay. SLV trading down a little bit on this news. Okay. I'm not making any changes here. Okay, not making any changes. I don't go into these and make changes based off of these reactions in a minute or two. If I'm not in the trade, if I'm planning on making a change on the reactions here. Gold miners down just a little bit here. Okay, we are in ABX. Okay, we are in ABX. ABX is pretty much held up. It's only down about 10 cents from where it was. Okay, silver is always the more reactive of the metals. Okay, the bonds here down about 47 cents. S&P here down about 6 points. Really a muted reaction. Really a highly muted reaction overall to this point. Las Vegas Sands hasn't even moved on this. Oil's down a little bit more than what it was. So initial reaction here, quite muted. In fact, you see stock futures, from the S&P standpoint, there's nothing there. Oil's pulled back a little bit here. QM, we get a little bit of a pullback, but we're only talking about 25 cents from where it was. When I say muted, look, 2010, 2011, even 2012, these type of events, we'd be seeing 20 to 30 point swings in the market itself. We would see 3 and 4% moves in things like gold and silver and oil and in bonds. And so when I say muted, yeah, it's not very muted relative to what the market's been doing over the last 2 weeks, but relative to what we've seen on these events in the past, this is extremely muted. Extremely muted here. And again, we're only dealing initial reaction so far. Things can change a heck of a lot. Okay, things can change a heck of a lot here going forward. So we have that initial reaction high of about 1766 on futures. Okay. Typically, you will get a reaction high and you will get a reaction low. Okay, you'll get a reaction high and a reaction low that tend to happen within about the first 15 minutes. Okay? And typically, not always, but a market that closes above the reaction high is bullish, and a market that closes below the reaction low is bearish. Okay, so right now in the first couple minutes, we have a reaction high of 1766, a reaction low of 1758. So about an 8-point reaction, which is a very muted reaction. Very muted reaction. We're moving up now here. Again, we may set another reaction high within the first 15 minutes. We're kind of looking, all right, where's the reaction high? Where's the reaction low that comes in here? For the TLT, you can kind of see here, if I zoom in, the TLT, what it's done, it's created a reaction low. It's 50 cents off of its lows already. Best case scenario for TLT is for it to react to the downside and reverse and go higher and close back above 108 today. That is absolute best case scenario. In fact, generally, when we're talking about days like this, the reversals are easier to trade than any sort of continuation. So, we see silver react a little bit. We see silver react to the downside here. Okay, I'd want to be adding to silver if we get back and erase this reaction. Okay, I'd want to be adding and buying into to more silver if that happens. And at the same time, I'd want to be buying into more bonds if we start to push back above 108 here for bonds. But, look, bonds are only 20 cents off their highs for the day, only 20 cents down. It's such a muted reaction. You can't even really tell it's moved here on the chart here for stock charts. Okay. There's no movement. Silver probably, the biggest of the movers from the things that we're talking about, but even very mild relative to past reactions. Gold here, you see it kind of just coming back to near its lows on the day. The ABX, okay, Barrick Gold has held up very well. In fact, Barrick Gold is now trading higher than it was with the Fed, okay, holding on to the 7-hour moving average, which is what we want to see there with Barrick Gold. And then the XLE here, okay, it's about where it was when the Fed minutes came out, right? Just kind of right about that same spot. So very, very muted, and lot to come here. Lot still to come here from a movement side. We've seen the markets move on low to no volume all week. This is finally a volume catalyst for the markets. We'll see, what kind of movement that they take out of this. The U.S. dollar, I'm going to plot the euro versus the U.S. dollar. Okay, you can see initially the euro dipped versus the dollar, and so we have basically a little bit of dollar strength. Okay, a little bit of dollar strength coming in, and that's one of the reasons why you see the small little sell-off in silver and gold. Here's the UUP, getting a little bit of a bounce up here off of its lows today, and so that's going to push them down just slightly. Okay. I agree with you, Jay. I think this is a great buying opportunity in the metals and gold and in silver. I think it's a fantastic opportunity, for those that have been wanting to be a buyer of bonds, to basically be able to buy into this. Fed not making any changes, basically taking tapering off of the table. It's for bonds, for gold, for silver. overall it's positive here. Fed says economy too weak to begin taper. So, even when Fed is going to start talking about tapering, they need 3 months to prepare the markets to do this. So basically, this takes tapering off of the table for the rest of 2013. And the next event or the next concern that the markets have to address is what happens with the U.S. government January 15th to February 3rd during that time period when we're going to have to go through the same stuff that we went through just a little bit ago. Okay. Interesting from what I've been reading here or seeing on my other screen in regards to this Fed news and the statement. Looks very similar to the ECB, European Central Bank, that came out earlier. As far as the tone and things that are going on there. From here's just a quote from the text to support continued progress towards maximum employment and price stability. Right, they're talking employment and price stability, which they've been kind of beating the drum on quite a bit for the last 3 years. The committee today reaffirmed that its view that a highly accommodative stance on monetary policy will remain appropriate for the considerable time after the asset purchase program ends and the economic recovery strengthens. In particular, the committee decided to keep the target range for federal funds at 0 to 1/4% and currently anticipates that this exceptionally low range for the federal fund rate will be appropriate at least as long as unemployment rate remains above 6.5%. And inflation between 1 and 2 years ahead is projected to be no more than half a percentage point. So basically they're saying, look, our internals, jobs and inflation aren't telling us to tighten at all. And, they're going to keep the highly accommodative stance going forward here. Okay, so we're getting a little bit of move back down towards the reaction lows here. We are seeing here. Let's pull up the euro dollar. We're seeing the euro get slapped a little bit here. Falling euro would be negative for the broader markets, for the broader S&P here. Looking across the board, though, nothing major. Nothing major here. I mean, the biggest moves are in gold and silver, and it's hard to even call them really big moves for gold and silver. Sorry, I'm kind of monitoring several screens right here. Jay, you're loading up on USO puts. Yeah, I mean, this could be a little bit of a death nail for oil, as far as we're pushing oil down below 95. Absolutely, set up there. The USO just breaking down after this little bear flag pattern here. Very bearish action for the USO. The XLE, I'd really like to see this thing close down 60 to 80 cents to $1, but just somewhere between here and another 40 cents lower, but not have an exaggerated sell-off here into the close. Just sell off a little bit more into the close, and then start to see that selling happen tomorrow. I think that would be much more positive for it. ABX still holding on to the 7-day moving average, and no real major shift in the wind here for ABX, actually holding up remarkably well, and then holding up better than some of the AUYs or the Gold Corps or the Newmont Minings of the world. ABX is definitely holding up better on a relative basis. Here's silver. Okay, you can see the reaction here on an hourly basis. The reaction lower. We're coming off the lows a little bit here, but still not a huge reaction. Yeah, Max, I hear you. Yeah, no, I'd be fine with XLE going down $5 today, right? No, I'd be fine with that. Yeah, I'd pull it at that point, but sure, yeah, I'll take that, right? I'll always take an anomaly to go my way, right? As far as trade entries here, very interested in catch short. Um, from an hourly standpoint, we're getting some nice little confirmation there as it's pushing back below the 7-hour moving average. We have a little bit of a bearish engulfing going on Caterpillar here today, but basically we've had this consolidation happening, and so a short on Caterpillar with an 85 stop is setting up very well here. Something like some of these solars, like the Trina Solar here. Closes down about where it is. That second pierce to the lower Bollinger Band. You typically get some follow through and some run out to the downside of them, and that kind of takes TAN here as well. I was asked about buying Starbucks. Okay, I wouldn't be a buyer of Starbucks here. Just simply they have their earnings after the bell today, right? They have their earnings. And yes, it's a strong one, but with those earnings, who knows? I'm interested to see how some of these the coal and something like the U.S. Steel, something like the Walter, how they hold up today. Walter was up pretty nicely on their earnings report, have really come back a long way. I was surprised to see Walter up on their earnings report. We had talked about CSX, the railroad. We had talked about how the railroad earnings were showing that there was still a lot of weakness in coal. And so, showing that, hey, you know what, just not really that great out there for coal. And, maybe some of the reaction is what we're seeing here in Walter. I mentioned the railroads. Be very interested in the reaction on them. Here's CSX. We do have double top potential. We have negative divergence within the MACD, a fresh pierce of the 7-day moving average here. So some really good stuff as far as for those that would want to short CSX here. Remember the earnings; they just weren't. They were in line. But not enough growth to warrant some of the growth in the stock price. So to see this thing take a haircut, definitely on the list of possibilities. Union Pacific setting new lows here. Canadian Pacific had much better earnings. This isn't a railroad I would short. If you're looking to short a railroad, I would look CSX, my favorite out there. As far as take on oil. Oil lower. Oil lower is my take. Probably low 90s. Probably low 90s there as far as a target for it. All right, so we've seen stock futures really come off here hard. Selling really hard here. They're down 13. Let me come over to the futures. You see some of the reaction lows breaking here. Okay, you see some of those reaction lows. Bonds still about where they were, down 44 cents. No real reaction. Silver about where it was. ABX coming off a little bit now with the market pushing lower. EEM. EEM here with a nice reversal, and this is a reversal that just screams it's going to have follow through. I know we've had these candles before on the EEM or this type of action on the EEM before without follow through, but given where the broader market is, screams that we're going to have follow through. The IWM continues to weaken here. Small caps are down 1.4%, large caps down 0.68%. So really a double underperformance in the small caps. financials here, breaking that down below the 7-day moving average with a bearish engulfing after this little gap down that we saw last week. Look, I mean, from a setup standpoint, things are screaming lower, absolutely screaming lower. ABX just lost all of its gains here. Let's see here from an hourly perspective. You see where that's coming down, breaking below 20. That's what I did not want to see. I did not want to see this thing break 20. Again, I'm not going to react to it here. We'll let it play out for just a little bit. But we are getting that breakdown. Silver getting back down towards its lows here. And this is really off of the big surge over the last couple minutes in the U.S. dollar that's creating some of that activity. Bonds here also pushing down into the lows here in the short term. So we are seeing stocks, gold, silver, oil, bonds. We are seeing every asset class in the market go down. This is rare. You don't see this very often where every asset class in the market goes down. One of the big bearish arguments over the years has been that we will hit a day where every asset class will go down, where there will not be a safe haven, where every asset class will fall. And, not saying we're there, but we're seeing that today. Very unusual to see each one of these asset classes pushing lower. I would expect that one of them would resolve themselves here. You see ABX, you see the way it's moving here. Let me just pull up the chart. I mean, take a look at ABX. Here's the 1-minute chart. Look at all that volume coming in here. Okay, and we have this strong pullback. We snap all the way back, come back. I mean, we're moving so fast here. Makes me wonder if there's not a little bit of news on ABX here, but don't think so. Yeah, that day we'll all buy Bitcoins, right? Absolutely. Baidu's actually been going up through this a little bit. Las Vegas Sands has turned and gone negative. Las Vegas Sands is one of, as far as from a short side temptation, one of the best setups out there. We talked about it in the candlestick video today. This thing ends lower. It's one of the absolute best setups out there with Vegas Sands. I'm curious what some of the opinion type articles that are coming out are saying. As I skim some of the things, I see a lot of term overreaction. Not sure why they would say that, especially since this is hardly a reaction. I mean, just put this reaction in context on the S&P. Now, we haven't broken the 7-day moving average. I mean, it's just like, what reaction? Okay, silver, still up on the day, but off of its highs. XLE continues to weaken here. Just continues to weaken, and this screams add as far as add to the position. And I will have no qualms about doing that here into the close. If we see XLE that's going to close down here, I will take some more of the money that I have for the candlestick challenge and put that here on XLE. I probably won't change ABX here under 20. I do expect this to snap back a little bit. I would expect that if the market itself, the S&P, ends at its lows, that we do see gold, silver, bonds snap back tomorrow. If they don't into the close this afternoon. As far as for TLT in that position, I'm not changing it. I'm not even going to sniff at getting out of it. I'm going to continue to hold on to it here. Still going for the 110 there. Just as I've kind of scrolled through things with the Fed and some of the text of the statement and everything else, I it really looks like to me that bonds are going the wrong way. And there's that saying in the market that price action's always right. Okay, and yeah, I mean when you look at it, it's always right. But sometimes there are moves that go one way and they defy a lot of fundamental logic and they snap back the other way. And I'm looking at TLT here and what it's doing, and that's really kind of what it looks like here to me initially. Okay, we see ABX going towards a new low here. It's getting gold now down $10 here. Gold pulling back a lot more than silver overall. A lot of this reaction to the dollar itself. See what the snapbacks are into the close here with it. Facebook's gone down to 49. Boeing holding up very well through this. Even stuff like PBR holding up very well. Google, Disney getting a little haircut. Financials are getting hit on this. Yeah, 1T. Yeah, they confirmed this selling, especially with the Bank of America here. The setup is great. JP Morgan, talk about just a beautiful technical setup to the downside here on JP Morgan. One of their currency traders was also kind of put on suspension for some fraud here. Goldman, Wells Fargo coming off its highs. The XLF basically, looks like the XLE, only the XLE is underperforming the XLF, which is, what we talked about we would expect. The overall hit to the broader market is a little bit greater than I would have expected here today. I would expect bonds to find support in the next 20 to 25 cents. Gold and silver, who knows? As far as where they're going to react to, they could just be such, overreactors that it's hard to put a price target to say, hey, you know what, this is where the reaction high or where that reaction's going to be. It is pretty clear oil, going to go lower, but there's still a lot to come here with this. Will the dip buyers come in? This is about the biggest dip that we have seen from a short-term standpoint in the market in quite some time. Will they step in? I don't think they'll step in aggressively. I really don't think they will step in aggressively. I think where we will probably see people step in when they step in will be in some of the sell-off of the staples, some of the sell-off in utilities, some of the sell-off in bonds, some of the sell-off in gold. I think that's where we will see, the sellers kind of, or the dip buyers step in. You'll notice a bearish engulfing here on gold. Okay, if you want to, as far as those go, historic reactions to bearish, bullish engulfings when they happen on data or on some sort of news, it's pretty good. It's pretty good. We saw the bullish reaction down here on the Fed Beige book. Today we're getting a little more of a bearish reaction. Is that concerning? Yeah. I mean, does that concern me in regards to silver? Sure, absolutely. Absolutely. Does it shift or change the overall trend? No. No, it doesn't. One of the things that you've seen me do during some of these times when looking at the reactions and kind of going through some of the various stocks is I will look for stocks that are breaking above or below the 7-day moving average. In this case today, we're not talking about a lot of stocks that opened below the 7 and are now trading above. We're talking mostly about stocks that opened above the 7 and are now trading below. And so on the S&P 500 alone, we're talking about 175 stocks on the S&P 500 breaking the 7-day moving average today. That is huge confirmation of overbought, ready to sell. Okay, overbought, ready to sell. Yeah, Jay, as far as the sell-off in the metals, yeah, I mean, the sell-off in the metals, okay, metal sell-off, whoops, let me type this because I'm not sure if you're on video, but metal sell-off is short-term dollar reaction, maybe even more of a euro reaction than dollar. Um, yeah, I mean, one T you mentioned seems like a Pepto cell, relief from the overbought bloated condition. And then the question comes, well, how much relief does the market need? Well, typical corrections are 3 to 5%. And when we look at this market, we're talking about a market that hasn't even corrected 1%. And so, how much do we get something like this? Do we get something like here in August? Or do we get something like we saw here in May, where we get a little short-term sell, the dip buyers step back in, and then we increase in volatility as we go lower? Okay. Look, bottom line, when there's a day with this many stocks pushing below their 7-day moving averages on the S&P 500, that's not a bullish sign in any way, shape, or form. Here you can see kind of the tops of the group, the Fords, Citigroups, Alcoas, Morgan Stanleys, and it's not. You'll notice it's no respecter of sector, of industry. It's happening. Financial cyclicals, healthcare, energy, technology. We're seeing it happen kind of across the board here as I go through. Not as many utilities, not as many consumer staples. There are a few, but not a whole lot there. Yeah, I just got an email here asking if I think this is a good place to step in and buy the TLT. Look, obviously I'm still bullish on TLT. And, to see the TLT even go positive today wouldn't surprise me. It's only down 50 cents here. It does nothing to erase the upward trend that is being created here. I would feel more comfortable adding to TLT if it were trading above 108. Just simply because, the risk of it going down to 106.5, even 106, it's growing here. It's absolutely growing. It doesn't mean we're going down there. In fact, I don't think we go that low, but it's growing there. So we see Barrick snapping back positive here. It's been on a wild ride here over the last little bit. Barrick there, silver bouncing back positive here. TLT, quite a bit off of its lows. Market itself here, bouncing off its lows. And what are we seeing here? We're seeing the XLE, we're seeing the SPX, we're seeing the TLT, we're seeing gold, silver. They're all moving in unison. Everything is moving in unison. That's very rare. I'm racking my brain to try to remember another event where we saw everything move in unison like this, and I can't come up with one. I can't come up with one. I just texted John. I just texted another trader that I know to see if they remember anything like this. Maybe it's just my memory, but to see everything moving down in unison and now starting to move back up in unison is very strange. All right, reaction highs, reaction lows. They're in. Okay, reaction highs, reaction lows. Reaction high 1765, 1766, right up here. Reaction low 1751. So we have about a 15-point reaction on the reaction highs and the reaction lows. We have about 15 points here with that. That's for where the markets have been, where they are. That's about you know that's a pretty good reaction range. So as far as broader market, we start to trade back below 1751, 1750. Yeah, then great, great for shorts. Start to trade back above 1765. The longs are going to definitely have the advantage there. Robert, I'm chuckling a little bit inside at your question. Robert asked, "Do you find this unique reaction disconcerting at all?" And I do. I find it to be. I kind of roll my eyes at it a little bit. Just we've talked about how the markets are going to do some historic things and how we're in a kind of a historic situation. I guess I'm just not disconcerting, but it makes me a little less confident about some of the setups that I see. Um, and so it just makes me look a little harder. And look, that unique reaction, that could dissipate by the close here. I mean, we still have another hour before I'm willing to step out on a limb and say anything about this market or future direction of gold, silver, stocks, bonds. The only one I feel comfortable with is oil. Uh, so no, but is it something to account for? Sure. I mean, there's always going to be unique reactions. This one's a little bit more unique. Okay. Jay, if you had cash to burn up, I'd short UUP. Nothing has changed to justify the spike up other than a relief rally. Yes, and Jay, I agree with you there to a point. But here's the problem. When the US goes down, right? And everyone says, well, things are weakening in the United States. The economy is weakening. They say, well, shouldn't the dollar go down? Well, no, it actually goes up. It tends to go up since 2007. Tends to go up. Why? Well, because so much of the rest of the world is pinned on the economic condition of the U.S. that if the U.S. economic condition is going down, Europe tends to go down more. Australia tends to go down more. Brazil tends to go down more. So there's this saying in the market, when the U.S. economy when the U.S. economy gets a cough, the rest of the world gets a cold. There's a lot of different ways of saying that, but essentially saying, hey, one little reaction in the U.S. creates bigger reactions in the rest of the world. So, dollar going up here is not can also be more of a sign of people fearing some of the economic condition in the rest of the world. I mean, if you take a look at the euro, the FXE, from a trade standpoint, it's pretty hard to be long euro right here. Pretty tough to be long euro. FXA, the Australian dollar, finally broke that 7-day moving average last week, and has continued to weaken here. And as long as that continues to weaken, we're probably going to see, materials and some of those other sectors struggle a little bit. But we've talked about correlations in this market, and we've shown how many times these correlations have shifted and changed, and how over the last 2 years, we get a correlation go on for 2 months that makes sense, but it completely reverses. It doesn't necessarily become uncorrelated. It actually goes from positive to negative correlation, where we watch and we say, you know what? Hey, as dollar goes up, gold goes down. And then we watch for 2 months how almost day to day, dollar down, gold up, or dollar up, gold up. The relationship completely changes, and we have been seeing that. We've been seeing that a bunch here this year. One of the things I'm looking at here is this an opportunity to be a buyer? Okay, is this a dip buyer opportunity? U.S. Steel, even Baidu. Is this a dip buyer opportunity now? Google, is this a dip buyer opportunity? And I don't see anything that's overly compelling right off the bat. Even among some of my favorites, Chipotle Mexican Grill, Halliburton, even among some of my fundamentally favorite stocks, I don't see a huge buying opportunity right here. In fact, I see more sell opportunities if you're looking at something like Netflix. If you're looking at something like Trina Solar, TSL, Huntsman, maybe a buy opportunity. DuPont, a little bit tough there. You can argue, well, Bank of America is holding up really well during this. And you could make that argument and say, well, Bank of America is holding up real well. It'll be the first to pop when the market futures start to go back up. You can make that argument. So we're dealing with silver. Well, let's go look at our positions here. I'm not going to change anything right here, but here's still silver. SLV, sorry. SLV, here's silver, up about 10 cents. Okay. Off of its highs, right? Off of its highs, but still up. At this point, there would be no reason to change the position. The TLT down about 60 cents here. Again, there's just no reason to change the position at all. In fact, wondering if even closing above 1750, 1760 gives a nice little re-entry or add more position to that position. ABX here, which shot all the way down to 1942, is back up to 1982. So you say, well, what is it? Is it bad that it's 60 cents off its highs, or is it good that it's 40 cents off of its lows? And for right now, it's a little too ambiguous to kind of make any decisions on. And then we have XLE, which has pretty much, it's been weak most of the day. Went down, set some new lows. It's 30 cents off of its lows, but from a pure just chart standpoint, that's a beautiful downside setup. An absolutely beautiful downside setup. And we're already seeing a little more volume today than we've seen in the ETF. If we go look at something like Exxon, we'll end up today with more volume than we've seen in the last several days. If we take a look at Chevron, we're talking about, not a ton of volume yet, but an ugly reversal off 122. Halliburton, some volumes a little bit higher here today. Ugly reversal on Halliburton. Really ugly reversal. Talk about a bear hammer. It looks like Thor's hammer, right? And those tend to have very negative downside implications happening. Okay. Curious to see what some of these like the Hershey's of the world. Hershey, yeah, has a bearish engulfing. I wouldn't short it. There's no way I could short this for Hershey, this bearish engulfing, just simply because of where it's happening and the sector that it's in. If I'm looking for this market to sell off, I'd much rather get into some of the small caps or some of the more economically sensitive type of stocks there. We are seeing these staples pull back a little bit, the Procter and Gamble's of the world. Wonder if we don't get a small little 2-3 day pullback that actually gives more of a buy opportunity within that group. Hewlett Packard's been green throughout this whole thing. It is off its highs, but it's just continuing on higher here up at 24. I'm kind of going through some of these stocks that have had bullish breakouts, and I'm looking to see, okay, something like Oracle, which had a trend rider bull, is it breaking down here today? And the answer is no, it's not breaking down. It's just a lot of the bullish signals that we've seen, they're not breaking down. They're getting a little weak on Oracle here, but this isn't any type of action that with Oracle you'd look at and say, you know what, the Bulls were in control yesterday and now it's squarely in the Bears' hands. No, we're not seeing a lot of that happen. All right. So we see our reaction low, our reaction high. I'm going to stick. I'm not going to make any trade adjustments right here. Obviously have a few concerns with things, but overall nothing's in a position to alter or change. I'd love to add a little bit more to the energy downside exposure as we head into the close, potentially into LVS and potentially into CSX. CSX is the railroad that we've been talking about. But again, I want to let this play out for the next 45, 50 minutes, and we will go from there. So in the meantime, I'm going to be on chat, just kind of going through various stocks and different setups. As I see things, I will put them out as well. And then we'll get on here in about 45 minutes. We'll talk about any trade changes we might need to make, and we will go from there. Thanks for hopping on. Talk to you later.